Today, we are tackling one of the oldest, most fundamental rules in the business playbook. Should a company's one and only goal be to make as much money as possible? You know, the answer isn't nearly as simple as you'd think, and it might just change the way you look at the entire business world. So, let's dive in.
So let me ask you, what is the number one goal of any business? If your first thought was to make a profit, hey, you're in good company. For decades, that has been the standard answer, the absolute North Star for companies big and small. But the real question is it the right compass to follow in today's world?
To really get into this debate, we have to understand why this idea became so powerful in the first place. So let's start with part one, what I like to call the gospel of profit, and really make the case for why making money has always been seen as the main mission.
At its heart, we're talking about a concept called profit maximization. And the definition is pretty straightforward, right? It's the goal of squeezing out every last drop of profit you possibly can within a certain amount of time. It's simple, it's clear, and it's really easy to measure.
And look, this isn't just some casual business school idea. This quote really hammers it home. Profit is the absolute lifeblood of a business. Without it, you can't pay your bills, you can't grow, and, well, you can't survive. It's the engine that makes the whole thing go.
See, profit isn't just a number on a spreadsheet. It's basically an internal health check. Think of it like a barometer for how efficiently the business is running. A healthy profit tells you that you're using your funds wisely. It helps you build up a cushion for tough times, like a recession, and it gives you the cash you need to grow down the road.
And beyond just internal health, profit sends some really powerful signals to the outside world. It's what attracts investors. They want to bet on a winner, right? It helps build your reputation and goodwill. And of course, being profitable gives a company the confidence to expand and, just as importantly, the ability to pay its people and its suppliers fairly and on time.
So when you lay it all out like that, the case is pretty compelling, isn't it? It seems to add up perfectly. More profit means a healthier, stronger, more successful business. It feels like this undeniable law of capitalism. But at what cost? This one question is what cracks the whole debate wide open, because chasing profit above everything else, well, it can come with some serious downsides.
And that brings us to our second section, the profit trap. This is where we're going to dig into the hidden flaws of a profit-first approach and see how that single-minded focus can actually lead a business into some pretty dangerous territory.
First off, there are some major blind spots just in the concept itself. I mean, the word profit is surprisingly vague. Are we talking gross profit or net profit after taxes? Because that changes the picture completely. But even more important, a simple profit goal totally ignores two massive factors, time and risk. Just chasing a number might not give you a true and fair view of what a company is really worth in the long run.
And this slide makes one of those blind spots crystal clear. From a pure profit maximization view, earning $100 today is exactly the same as earning $100 5 years from now. But we all know that's not how reality works, right? $100 in your pocket today is way more valuable, both because of inflation and because you could invest it and turn it into more money over those 5 years.
And then you have the real-world consequences. That constant pressure to max out profits can tempt people to cut corners or worse, engage in corrupt practices. It can create this toxic, cutthroat environment. It can draw unwanted attention from regulators, and it often leads to conflict with employees who feel like they're not getting their fair share of the pie.
So, all of this brings us right to the heart of the issue, what we're calling the bottom line dilemma. We've got two very different and honestly very compelling arguments about what the main goal of a business should actually be.
This table really lays out that core conflict perfectly. On one hand, the arguments for profit, efficiency, growth, stability, it's all about building a strong, successful company. But on the other hand, the arguments against it show how that very same pursuit can actually undermine the company's long-term health by ignoring risk, time, and its impact on people. It is a true balancing act. So here's the crucial takeaway. Nobody, and I mean nobody, is arguing that profit isn't important. It is absolutely essential. A business has to be profitable to survive. But the evidence really suggests that making it the only goal, the one thing you chase above all else, can be a dangerously short-sighted strategy that might create way more problems than it solves. Which, of course, leaves us with one final massive question. If profit is a flawed compass, then what should guide a business instead? Well, many experts now point to something called wealth maximization. This idea isn't just about short-term profit. It's about increasing the long-term value of the entire company, factoring in those critical things like risk, time, and the well-being of everyone involved. It's a much broader and maybe more sustainable vision of success. So what do you think? Which one is the better guide?